Look, I think if we get 10 or 20% above $100,000, people are going to assume that there is a sort of black hole pulling Bitcoin up to $200,000. And I just think once we get sort of out of this center of gravity at $100,000, there is just this rush, as you said, people FOMOing in until it gets to, my guess is 200, it could be 250, maybe it's 150. But I suspect it's in that 200 zone. I've seen a lot of forecasts in and around $200,000. Bitwise said, we think Bitcoin will get above $200,000. I think 250 is definitely possible. That's a psychological number. And I think it could happen very fast. Will it drop from 200 to 100? I don't think so. But if we went to 200, could we pull back 30%? Of course we could, right? Of course we could. We haven't repealed human nature. But I do think the winter, if it happens, will be much, much shallower. It'll be like a global warming winter. It's going to happen over the course of a few months.
Matt Hougan begins by emphasizing the imbalance between Bitcoin's limited supply and the surging demand from multiple sectors. In 2025, the Bitcoin network will produce approximately 160,000 to 170,000 new Bitcoins. However, the demand from corporations, ETF, and even governments far outstrips this supply. For instance, corporations purchased 270,000 Bitcoins last year, while ETF acquired a staggering 400,000 to 500,000. When governments enter the fray, seeking to acquire hundreds of thousands more, the supply shortage becomes glaring. This mismatch points to an inevitable conclusion: prices must rise. The market will need current Bitcoin holders to sell, but at what price will they be willing to part with their assets? Matt explores the psychology behind price thresholds, suggesting that many holders may not sell until Bitcoin reaches $150,000, $200,000, or even $250,000. This resistance could lead to a sudden and violent upward price movement as the market adjusts to meet the insatiable demand.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
The Bitcoin network is going to produce about 160, 170,000 Bitcoin next year. Corporations bought 270,000 last year. ETFs bought 500,000. Governments are talking about buying hundreds of thousands. Any one of these sources is more than all the net new Bitcoin that comes out of the market. And that means, just from a simple perspective, that in order to satisfy that demand, which I think is unstoppable, I think you're going to see all three sources buy hundreds of thousands of Bitcoin. People who hold Bitcoin today have to sell. Maybe they're willing to sell at $100,000, but if they're not, what is the next level at which enough of them will sell? Is it 125? Is it 150? Is it $200,000? I think the market could sort of find itself in an air gap where people are unwilling to sell until it gets to a new major level. And that move could be very violent. You might remember last year, we bumped around the all-time high at like $72,000 for 6 or 7 months. And then when we broke through it, straight to 100, right? I think you could have an element like that here as well. We're hovering around $100,000, but if we get above it, straight to something, I don't know what that something is, but there is just too much demand, not enough supply, and the only solution to that is higher prices. I think that's what we're going to see in 2025. Yeah, it does sound crazy, but it is actually happening. I love the way you said it. That defines where we are in the crypto market. Look, I think if we get 10 or 20% above $100,000, people are going to assume that there is a sort of black hole pulling Bitcoin up to $200,000. I think when you think about this market where there's a fundamental mismatch of net new demand versus net new supply, and that has to be filled by people willing to sell, I think you have to think about behavioral cliffs. Who's going to sell at $117,000, right? No one is sitting at home on their sofa right now thinking, well, when it gets to $117,000, I'm going to sell. They're either thinking, I'm going to sell here at 100, or maybe I'm going to sell at 150, but probably I'm going to sell at 200 or 250. And I just think once we get sort of out of this center of gravity at $100,000, there is just this rush, as you said, people FOMOing in until it gets to, my guess is 200, it could be 250, maybe it's 150, but I suspect it's in that 200 zone. I've seen a lot of forecasts in and around $200,000. Bitwise said, we think Bitcoin will get above $200,000. I think 250 is definitely possible. That's a psychological number. And I think it could happen very fast. Look, the reason I think we have cycles is because in a bullish market, leverage builds up in the ecosystem, and then people do crazy things, and then that has to be washed out. I mean, you can make much more specific arguments for the 2022 bear market or 2018, but generally speaking, that's the vibe. Bull, leverage, insanity, washout. If we start ripping to 200K, we're going to have people that get over levered. We're going to have people who do wild things. We're going to have silly projects that are fraudulent. And that tells me that at some point we'll have a washout. Will it drop from 200 to 100? I don't think so. But if we went to 200, could we pull back 30%? Of course we could, right? Of course we could. We haven't repealed human nature. But I do think the winter, if it happens, will be much, much shallower. It'll be like a global warming winter. It's going to happen over the course of a few months because you have these long-term bullish trends that are going to play out over years. Institutions are going to be moving into Bitcoin for the next 5 years. And so even if we have this blow off of leverage that leads to a significant pullback, it's going to be picked up by these long-term trends that I don't think are going anywhere. So we haven't repealed the 4-year cycle, but we've probably shallowed it and shortened it. And what that means for investors, I mean, from my perspective, is just ignore it. Just buy Bitcoin and hold it, and you'll be fine. It's impossible to time these things, but be aware that there's going to, yes, of course, at some point, leverage will build up and it'll get flushed out. It's going to happen. But that doesn't mean that we've repealed the bull market. There are two things that can really change the game and rewrite these cycles. The one is if you see this global game theory of countries looking to build positions in Bitcoin, it's Katie bar the door. We're in a completely different scenario where you could run for a substantial period of time. And then the other you mentioned is if you really see Bitcoin penetrate retirement savings being used in US 401ks as an example, which right now it effectively can't be. That's a game changer too, because people save for retirement every month. Bull market, bear market, it doesn't matter. Every month, automatically, even I save a portion of my paycheck that just buys stocks and bonds, right? Just without even thinking about it. And if you get that, you start to get much more support that sort of cushions any of these pullbacks because you have persistent price inelastic demand every single month. And so if we see that, I think that will be a game changer as well.
While Hougan identifies as a monetary Bitcoin maximalist, he maintains an open mind about the broader crypto ecosystem. He acknowledges Ethereum and other blockchain projects as separate innovations that complement Bitcoin's role as sound money. He also supports safe access to diverse crypto assets, including stablecoins and even meme coins, as they expand the crypto universe. Hougan's balanced perspective reflects the growing trend among investors who hold both Bitcoin and Ethereum as distinct assets with unique purposes. This approach widens the appeal of the crypto market and fosters innovation across multiple sectors.
Particularly in zones where you see a lot of offshore wealth just owning real estate as a place to own their capital, right? You could buy a house in Mayfair or you could own Bitcoin. I think on the margin, you'll see people defecting to own Bitcoin in lieu of that house in Mayfair, which has carrying costs and all these other challenges that are associated with it. So yeah, I would say particularly in those offshore wealth haven spaces, you may be right. I mean, there's still limited demand, limited space, limited availability, but on the margin, you would imagine that people with wealth looking to preserve it from fiat debasement, more of them will go into Bitcoin than have in the past. We've already seen that with gold. I think gold would be, another $1,000 an ounce higher if we didn't have Bitcoin. because I think some of that demand is going into Bitcoin as well. I find that a lot of people out there at their core are Bitcoin monetary maximalists. They think of Bitcoin as money, but they're comfortable in that. They don't feel threatened by crypto that does other things, right? Ethereum is just another thing. It does something entirely different from my perspective than Bitcoin. So I am a bit of a monetary Bitcoin maximalist, but that doesn't mean that I'm not excited about what's happening in crypto and programmable money and tokenization and stablecoins. I find that interesting too. And I think you can have that maxi mindset in Bitcoin and still be open. And so I think that's what we'll see a lot of ETF investors do, have their Bitcoin and then their Ethereum, and really think about them as sort of two separate buckets. I think is the reality, right? It broadens the pie, it brings people into the crypto universe. And yeah, I think we do need to be open-minded. And I also agree, if people want to buy it, let them buy it, right? I may not love meme coins, but I understand why they exist, and there are people who want to access it, and I'd love for them to be able to access it safely, right? That's a great good thing. So I'm open on those fronts. It's hard for someone who hasn't been operating inside the crypto ecosystem to understand how suffocating it has been from a regulatory perspective. It's not just the things you see from the outside, like working for 10 years to get a Bitcoin ETF, which is nearly a record in the ETF industry to offer something so simple that helps investors access what has been the best performing asset in the world over those 10 years. Like, that seems ridiculous. But beyond that, at every level, everything you did was an uphill battle. You know, with Operation Choke Point 2.0, getting a bank account was an uphill battle, and you would periodically lose your bank account. If you were an entrepreneur with talent, thinking about where to build in the tech economy, would you really want to go into crypto where a senator has a anti-crypto army and the SEC, doesn't talk to you and then files suit against you if you try to do something? And then if you're trying to work with a traditional institution and you go to talk to them about this interesting new technology and they say, yeah, but Gary Gensler says it's all a scam and the White House won't let banks interact with this space at all. And the world, the IMF and others say that this is toxic and only used by criminals, that just shut down that conversation completely. So the market has been absolutely suffocated for 10 years from a regulatory perspective. And that's going to lift, even beyond the specifics, like withdrawing SEC suits or reversing SAB 121 to allow custody or allowing more ETFs into the market. Lifting that oppressive regulatory regime will allow all the entrepreneurs to actually build things with this incredible technology. And I think people are undercounting by a factor of 10 what that means. It's going to be a renaissance for crypto, a sort of golden age. And I think you'll start to see it immediately. You're probably already starting to see it on the edges right now.
Hougan sheds light on the suffocating regulatory environment that has hindered crypto's growth over the past decade. Entrepreneurs faced constant challenges, from losing bank accounts to navigating hostile regulatory agencies. However, he believes the tide is turning. The approval of Bitcoin ETF, the lifting of restrictive regulations, and the normalization of crypto in traditional finance signal a new era. This regulatory renaissance could unleash a wave of innovation, enabling entrepreneurs to build transformative projects without fear of institutional roadblocks. Hougan describes this period as a potential golden age for crypto, with far-reaching implications for the global financial system.